Tom, what would you do in this situation? Picture the scene. It's a balmy Sunday morning in Leicester. You're walking around Marks and Spencer's with your 4-year-old who's been reading a lot of Roald Dahl recently, and he decides he wants to be a giant from the BFG and starts walking up to other customers in the store going, "Oh, you look juicy. You're a nice human being to eat." What would you do in that situation?
I think you've got to put on a brave face, smile, and hope that they take it the right way.
So you're saying my response of also pretending to be a giant and saying, let's go find some other human beings to eat, and then hiding behind the menswear section wasn't the right thing to do?
It's not bad, to be fair. No, I rate it.
Welcome to Agonomics with David Udall, a podcast that examines the economics of agriculture. And hot off the press, my team at AHDB has just released further analysis of the farm inheritance tax, a topic of considerable conversation since it was first announced in the autumn budget. And this latest research suggests over 3/4 of all farms in England and Scotland of 50 hectares or more will be affected by the measures due to come into force in April of next year. That's over 42,000 farming businesses of at least 124 acres in old money we believe will be impacted. And that's without taking into consideration Wales and Northern Ireland. In this episode, we'll tell you how we've derived that figure and hear from an independent tax expert who can offer some advice going forwards.
Assess the current ownership of the assets and the land as a whole. We come across a lot of family farms where the beneficial ownership gets a bit muddy and people aren't fully aware of what they do and don't own and who owns what. Checking wills and partnership agreements as well, just to make sure they're all in line with what is expected. If
you're new to the show, we'll also have a market report for you, which is updated in a way that whenever you listen to this show, you'll always get the latest information. Oh, and each week I also chuck in song titles from a different music act for you to guess along the way. A sprinkling of popular culture, if you like, because it's not just farming that unites us. If anything, the show is growing, not fade away. And the last time out, we learned more about fairness in the world of farming, which I hope was cause for some satisfaction. Please follow and subscribe to this podcast to make sure you don't miss an episode. New shows usually drop every Wednesday at midday, though we've made an exception on this occasion by releasing it early doors on a Ruby Tuesday. And please get in touch. Comment on any of AHDB's social channels or email us agonomics@ahdb.org.uk. So we're going to be talking about inheritance tax today and the impact of the tax changes on farm businesses in England and Scotland. But before we get into that, I wanted to give all of our listeners a heads up of some other work that's upcoming from AHDB. So through February, we're going to be releasing all of our sector market outlooks. So this is a specific publication for each sector that we cover, giving the view of what the market's going to do over the next 12 to 18 months or so that we can understand exactly what the market drivers are, what the supply and demand dynamics are, some of the external forces, and also, really importantly, going into some of the detail around what's driving consumer demand, especially in our livestock and dairy sectors. So they're going to be released through February, and we'll be reviewing each one in detail as we go through. Speaking of detail, there's a lot of detail about inheritance tax that we're going to go through now. So we will go through as calmly and as softly as we can. But there is quite a lot, so we'll take our time. Let's talk through the headlines first up. Let's just be clear, the reason that we've done this work, this isn't us as HDB trying to say whether the tax is right or wrong or the changes are correct. This is us as AHDB trying to show how the changes could impact different farm businesses and showing to our levy payers this is the impact by farm type, by farm size, and also crucially by ownership structure as well, because they're all relevant to working out the tax changes. We're not trying to give tax advice from this. This is very much about showing to our farming businesses, if you're in this general bracket, then you may or may not be more or less at risk because of these changes. So very much that starting point of people going into it saying, well, will this impact me? Here's almost like a one-stop shop that you can go to and look at and go, yep, I'm in England, I'm a cereals farmer of this size, this is my structure, is this likely to impact me? And therefore, should I get more advice? That's why we're doing it. So the headlines of what we've produced shows that we've got a figure of 42,138 farms, which is out of a possible just under 55,000 farms, will be impacted by these new tax rules. And crucially, we're looking at farms which are over 50 hectares or more in size. We'll talk about some of our assumptions, why we're not looking at farms below 50 hectares in a moment, but they're the headline figures, that of those farms in England and Scotland of over 50 hectares, that's the 54,938 for those that know their numbers. We're saying that 3/4 of those will be impacted by these changes. And it's interesting when we look at the more specific numbers around it, of how it breaks down. And a lot of it, I suppose, kind of makes sense of what you'd expect. So from an English perspective, we see that cereals farms are the areas where there's a significant impact. So for those farms of 50 to 100 hectares, for cereals, there's about cereal-specific farmers, about 4,300 across England. Just over 3,800 of those we believe will be impacted. Of those holdings in England for cereals that have 100 hectares or more, there's just under 9,000 of those, 8,765 to be precise, and we estimate that 7,899 of those would be impacted by this change. We've got figures on our website which show all of the specific figures, so all of this is published, so please go to the website and have a look. But it just goes to show there is a wide-ranging impact of these changes. And as I said, hopefully this will start people understanding what the potential impact on their business could be. But Tom, as I said, not about anything to do with BFG and Giants anymore, about inheritance tax. A lot of this comes down to the structure of the calculations that we've done and how we've come about these numbers. So do you want to just run through and explain how these numbers have come together and some of those crucial assumptions that we've built in to get to them?
Absolutely. Thank you, David. Yeah, the beginning of these calculations does start with the fact that DEFRA quite regularly, and the Scottish Government separately, for the Scottish side of things, release average balance sheets for each sector of the agricultural industry. So we are able to see what, for example, the average arable farm or cereals farm, what its net worth is. So that's all of its assets, taking away its liabilities and coming up with a figure. What we've been able to do is find the average price of a detached rural house and add that onto the net worth to make that further assumption of what the overall estate value might be for a farmer. And we can then come to a figure which helps us explain what category or what level of inheritance tax that the business will be able to have tax-free.
The crucial thing with this, Tom, obviously on a headline level, is the structure of the business and the ownership structure of the business, because that's one of the key things that helps to explain the tax potential, because there's multiple avenues to go down, isn't there, in terms of how the tax burden can be spread depending on family type and descendants and the structure of the ownership, and that's been the thing that we've been very careful about, ensuring that we've received some expert tax advice to be able to make sure we build those correct assumptions into this model as well, isn't it?
Yes, exactly. We were able to gather some data from the Office of National Statistics, and with a category involved in their inheritance documents, we are able to see the number of estates that contained buildings and land. And we are able to see how many of those were married, how many were widowed, and how many of those were never married. And through that split, we are able to work out what category or what level of inheritance tax exemption a farming business might be able to take up. This also includes whether you've got no children, as that also affects the amount of tax that you are able to, that you will need to pass to the government upon death.
The other thing, Tom, that is really important with this, that's related to the ownership structure that you were talking about there, is about how the agricultural property relief and business property relief and the nil rate band, and this isn't as simple as just saying there's a £3 million value that can be passed on, is there? Depending on circumstances, there's different levels within that, and the tapering of those levels is different as well, which is really important to consider.
Yeah, that's exactly right. It's very much a nuanced answer. And when we delve into it, there isn't an exact science being able to say one size fits all in terms of these categories. However, we've made some assumptions to be able to place different farm types in different categories to be able to produce our figure.
So let's talk about some of the numbers now, Tom, and look at the ones in detail. And I guess you'd expect, from a cereals perspective, from a general cropping perspective as a farm type, we've got those as two separate definitions in the work. Obviously going to be more land intensive because of the nature of what they're doing. Land is a significant driver of asset value on farm. So we'd expect them to see a significant increase, notably in England because of size of farm structure. Less so in Scotland, as you'd expect, because of the volume of farms, but the proportion affected is still considerable. You'd expect that from a cereals farm, because again, some of the numbers we put in were just showing that there's a significant asset value on cereals farms.
Exactly that. Even without the house to start off with, although we have factored that in, around I think it's just over £450,000. The average net worth for a cereals farm is, where from DEFRA produced figures from 22-23 comes out at just over £3.75 million. Now that is an average taken over whether you're an owner-occupied cereals farm, tenanted, mixed tenure. That's an average taken out of all of those. As you'd expect, if you're a tenanted farm, that will be less than that. But a mixed tenure is actually the highest value in that category at 4.7 million. And as I said, that's before we include the value of the house. Now, what's important to realise is we haven't taken in any assumption of any personal assets that the farm business might have, or the owners of that farm business. But the stats do include a lot of assets that a farm business might have, such as your breeding livestock, for whether you're a livestock farm, your machinery and equipment, your permanent crops, your sort of liquid assets, the cash that the farm might have, and your bank loans when you're taking away as a liability from those assets. But yeah, some pretty high figures.
And you mentioned actually like assumptions there, and one thing that we haven't mentioned is, this is a figure as of now, isn't it, Tom? This is basically saying, and this is where we kind of get a bit morbid with it, if all those farms were to drop dead, as it were, this is the number that would be impacted as of now. So this isn't phased over a period of time or looking into the future or over years. This is saying as of today, this is the number. And obviously within this structure, whilst we're saying that these numbers are impacted, there may already be businesses within these numbers that have the appropriate tax structure and business structure in place and kind of going through that advice, which is another figure that we've looked at with this in terms of the speed of change required. That at the point when we're talking today at the end of January, there are 300 working days until the 1st of April 26, when those tax changes obviously come into effect. And that would mean that 140 farming businesses across England and Scotland would need to have all of their tax and ownership structure sorted within that time period. Per day, 140 farming businesses per day would have to get their tax structure sorted within that time period, which doesn't seem a particularly achievable thing to do. But looking at the figures again, Tom, the other thing that surprised me a little bit was actually the scale of impact on the livestock sector, because I was starting to think about it, thinking, livestock areas would be generally smaller in terms of land usage, but there's still a significant impact. So again, looking at the English perspective for both lowland livestock and LFA livestock, there's about 1,500 farms affected of 50 to 100 hectares. But then those over 100 hectares, you've got 2,700 in lowland livestock, almost 3,000 in LFA livestock. And then the same goes for Scotland. In Scotland, those LFA livestock farms of over 100 hectares, 3,700 affected out of 4,131 in total. So from a livestock perspective, I was a little bit surprised at that potential impact size.
Yeah, that's very true. So looking at our net worth, and then you add on that average price of a property to the estate, what you've got to remember is that there's a significant proportion of those estates that contained buildings and land that weren't a married couple, and therefore were either widowed or had never been married, and therefore won't be able to qualify for that top band, that 2.65 million that we've made as an assumption to be able to be passed on. So once you've counted in the lower thresholds, there is a significant amount of people who may fall into that category. And as I say, particularly for the livestock industry.
Thanks for that, Tom. There's a lot of detail to go through here. And crucially, I would say for anyone listening to this, please go to our website, find the article, just do a quick Google for AHDB and inheritance tax changes. I'm sure you'd find it, and read through the assumptions as well as the detail in terms of the specific numbers, because, we can't really do justice here without having our monologue about all of the data that goes into the model, other than just kind of giving a quick overview of it all. So please do go to the website and look at all the detail and understand those assumptions, because that is the critical part. And if you've got any questions, any feedback, then agronomics@ahdb.org.uk, please let us know. We are going to have a short break now where we'll get the latest from the markets. And when we come back, we're going to be talking to tax expert Luke Cochrane from Land Family Business, giving his views on what it all means and what farmers can do to prepare for the changes.
Hi, I'm Freya Shuttleworth, Senior Analyst at AHDB, with a look at the UK pork market. 3 weeks into the new year and pig prices are continuing the downward trend seen through the latter part of 2024. The EU spec SPP stood at 204.12 pence per kilo in the week ending the 18th of January, a year-on-year decline of 8 pence. Lower pricing is being driven by improved supply, seasonally weaker demand, and the continued pressure of falling EU pig prices. The differential between the EU and UK Grade S reference price currently stands at 45p. The latest DEFRA figures showed another month of strong growth in December for pig meat production, resulting in a total of 961,000 tonnes being produced in 2024, almost 4% higher than 2023. Production gains have been driven by a combination of higher carcass weights at 1 kilogram year on year and larger numbers of clean pigs, with total kill for the year standing at 10.3 million head. Keep an eye out, or an ear, for our agri-market outlooks coming this February, with forecasted trends on supply, trade, prices and consumption. And for the latest data and analysis on red meat, dairy and arable markets, head to ahdb.org.uk and click on Markets and Prices.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episodes you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
So welcome back to the second part of Agronomics this week, where we're discussing the budget and the implication of tax changes. And sometimes you can't always get what you want, but this week we have. And we are joined now by Luke Cochrane from the Land Family Business Company, who are tax advisors and experts. So before I start sort of grilling you on some questions, Luke, do you want to just introduce sort of who you are and what you do?
Yeah, thanks, David. This is Luke Cochrane, Director at Land Family Business. We're accountants and tax advisors to high net worth individuals, farms and rural businesses. We predominantly deal with strategic tax advice, so inheritance tax, capital gains tax and business structures.
So we're definitely speaking to the right man. So that's all right. We've got the right person. So in the first part of the podcast, Luke, we were talking about some of the work that you've seen with regards to how we've calculated the sort of the impacts of the inheritance tax changes by farm type and structure. But I'd just be interested, from your perspective and from your business perspective, what's been the reaction that you've seen from I suppose farming industry, farming clients, and in light of those budget changes?
I think very initially, it was a lot of panic and uncertainty. I think people weren't quite aware of what impact it was going to have. But I think since then, one of the positives we've probably have seen is that it's starting a lot of these succession conversations a lot earlier on than previously, which I think is a big benefit for the farming industry as a whole. And if that continues, then maybe there is one positive outlook out of the big changes.
And that, I mean, you mentioned uncertainty. That is one of the things that, one of the reasons rather why we wanted to do this piece of work, to kind of help see through that fog of uncertainty and what it all means, and add a bit of explanation in terms of which farming businesses by size and by type might be affected. So I suppose on that basis, if you, for your average farmer, we are going to have to kind of like generalise things as we're talking about it here. But for your average farmer, what would be that first thing that you would be advising them to do to actually assess the impact of that budgetary change and tax change on their business?
I think there's a few different things that we'd be advising to do, but probably one of the main ones would be to assess the current ownership of the assets and the land as a whole. We come across a lot of family farms where the beneficial ownership gets a bit muddy and people aren't fully aware of what they do and don't own and who owns what. So I think that would be a good starting point. And alongside that, it's checking wills and partnership agreements as well, just to make sure they're all in line with what is expected.
Do you think, in terms of like partnership and wills and things like that, is that something that's a regular process that people update, or do you find that when you're speaking to farmers that actually it's kind of always that, I've had it in the bottom drawer for 20 years and I've never looked at it again? I don't know, we kind of end up getting a bit morbid because we end up talking about death and people don't really want to be, thinking about that all the time, really. Yeah. But it is important, isn't it, really?
Yeah, definitely. And I think it's very much a mixed bag. I think we have some farms that we deal with which are very, very on top of these things and regularly update wills, regularly update partnership agreements. But then conversely, you get the opposite side where they've probably had a will in place which has never been signed for the last 20 years. So we're not up to date at all. I think that's one of the main things we are finding is, especially in light of the recent changes, wills and partnership agreements will definitely need to be updated and kept up to date going forwards.
Just best business practice, isn't it, really?
Yes, definitely.
For everything.
Definitely.
I suppose, and again, when we're looking at it here, it's difficult to give blanket advice on what is a very complex matter, again, given the differences in farm business structures and different farm types and even regionality as well. So if you were in a farming position, if you were the farmer, what should be the key questions that a farmer is asking of their farm consultants and advisors to help them navigate through? What should be the things where they're going, I don't know about this. Should I be focusing on this? What are those key things that they should be wanting to know more about?
Yeah, well, I think the first stage is finding the right advisor. I think inheritance tax and especially business structures and this type of planning is very specialised. So your average accountant may not have experience in dealing with this type of work. So finding the right advisor is definitely the first step. And then I think a good starting point is just to look at what your current tax exposure would be under the new legislation. Pull together a list of assets, pull together a list of all of your income and what you think you're going to leave on death and where you think you're going to leave it. And then you can come up with an actual tax estimate. Once you've got that, it's a lot easier to have the conversation with your advisor to move forwards. And then it's looking at things like lifetime gifting, interspouse transfers, utilising trusts and potentially corporate structures as well. As you say, there is no one size fits all. So it is definitely going to be working with your advisor and having that conversation and probably going through 2 or 3 different options until it comes to one which actually works for you and the business and your family.
And all of that is evidently going to take time. And one thing that we've noticed from our analysis, today being the 28th of January when this podcast goes out, that means there are 300 working days from today until the 1st of April 26 when the tax changes come into effect. So this means that 140 farming businesses that are impacted, so of that 42,138, we need 140 farming businesses across England and Scotland per working day from today onwards to the 1st of April 2026 would need to ensure their business is set up to manage the tax implications, make any decisions that are required in terms of how they get around it, in terms of if they have to pay and how they pay. And that's one of the key things that we've mentioned before about uncertainty impacting investment and a lack of investment. This is the crucial thing. It's going to take time to process those things. So from your perspective, how long would you expect that process to take? Like if you had a farmer come and say, I need to write a will, evidently it's going to be complex depending on their family situation and the business structure, etc. but what's the average length of time that it would take to go through that process?
Yeah, very, very open-ended question, I would say. It very much depends on individual circumstances. It could well be, if you're working with a good solicitor and you have a good team of legal advisors and accountants in place, that you could have the planning and structures there within 2 or 3 months to 6 months, or depending on the type of assets and the amount of restructuring involved, it could be 12 to 18 months as a sort of a minimum. Very, very hard to say. It would be fully dependent on what the position was for the farm.
And I think that's one of those things where, whilst we as AHDB are not here to give specific advice, and I suppose we should make it very, very clear that this is not specific tax advice that we're giving here. So, this is the disclaimer. This is not tax advice. All we're doing is trying to talk about what the process that farmers should take out. If it is that length of time and it is that complex, and obviously, we've only got a year and a bit to go, starting off with those basics, like you said, of understanding asset scale and checking on documents, etc. Just doing those basics now is pretty much the sensible first step, isn't it?
Absolutely. And I think that's the point we've been trying to get across to everyone we speak to at the moment, is having those conversations as early as possible, having those discussions even within the family. It all leads to making the process a lot smoother down the line. I think it used to be that it was fine and people held on to assets until they passed away, which in the past was probably not a bad solution. But I think now that has all changed, and we need to start having those conversations earlier and start thinking about where you want to be in 10, 15 years' time. You need to start speaking to your advisors and picking out that team now. Even if you think you've probably got another 20, 30 years before you need to start thinking about it, I think that's probably changed. You need to have that plan in place for the succession, because even more now, so now we're finding a lot of the next generation aren't looking to take on the farming. So it's having a plan in place for worst case scenario, I think.
Luke Cochrane from Land Family Business, thank you for sharing your time with us. All of the information that we've discussed, the output of our work, is available on our website. And obviously a key part of the advice there was actually going and seeking advice and talking about it, which leads nicely on to something that we've said, which is very important and very pertinent here around mental health and talking about these issues. And if any of these conversations that we've had today, or any conversations that you have within your business, are creating any anxiety or creating any mental health issues, then there are plenty of accessible resources out there, again signposted on our website, so please go and search those out. Don't feel like you're alone. It's completely, everything's there to be discussed. And for those eagle-eared of you that was listening, I think we had probably one of the most obvious musical acts that we might have done this time around. It was the Rolling Stones. I don't have a grudge with anyone from the Rolling Stones, unlike with you two. I'll tell you about that another time, Luke. You probably don't want to know about that.